Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this, what do we have, Wednesday. I hope you all have a great week or had a great week so far. As usual, before we jump into things, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And besides that, all the tools that you see in this live stream / video, so the broker, charting software, the strategy I'm following, and so on, are linked in the description down below, so you can check them out there. And the one thing I always recommend, if you haven't done so, go and check out the Elliott Wave principle that you can read online for free when you're using, or if you're using the link in the description down below. You can use the same link as well if you want to order a physical copy. Now, with that said, let's jump right into it. And the first thing we actually have on the chart is SMCI. We started yesterday's stream covering it after the Hindenburg research report that was released yesterday. And in yesterday's episode, we focused on how the Elliott Wave principle applies and how, surprisingly, we exactly turned around at the 3618 extension level of this wave 1, 2 here. The subwave here is likely 1, 2, 3, 4, 5 for finishing a third wave. And as said, the retracement that we expect right now, if we use the rule of alternation, we don't necessarily get a precise value because we reach the 50% retracement level for the second wave. So we expect at least a retracement to 38.2% in this case, potentially even further. And we are potentially here right now seeing the development of the first wave 1, 2, 3, 4, 5 that will be wave A in this bigger corrective pattern that, considering that we're looking at a monthly chart right here, should take quite some time to play out. Our portfolio starts slightly in the green today. Our $30 GameStop calls that we wrote with an expiration on this Friday are almost at their maximum value, so we might be able to buy them back real quick, which brings us already into maybe already rolling our options, so basically buying them back and realize the small profit. I mean, the premiums were not that high, and already selling the ones for next week. Which brought me to an idea. I'm obviously not willing to write calls below our 30 strike price, because that would mean, even though our average is around 24, that we technically would give back premium that we earned earlier. However, I'm curious if we were to, so for example, if right now we were to sell the five covered calls for next Friday, we can see that we would get a credit of around, $45. However, I'm wondering what would happen if we do the following. If we, for example, say, actually, let's do this exactly. So right now, the mid would be around $9. So $9 times 5 is $45 minus the commission. So it's $40 that we would get for that. Now, I'm wondering, we could also, no, there's profile, so yeah. We could also, on the other hand, however, what if I say, okay, we sell a $45, a $25 strike price call, a $26, a 30, and on the other hand, then we have 34 and 36 doesn't exist, so we go with 35, and here instead of that we actually, so instead of the 24 we take the not 24.50, not 24, but we take the 25, and we see, yeah, there is no mid, because for one of our, for the 34 there is no volume, or 34, 35, 25, 26, yeah, and no volume for the 34, which would be the 26 equivalent. So if we get rid of that, so change the 26 to a 27 and the 34 instead to a 33, we suddenly get a mid price. So we would actually overall get more premium. Now, if GameStop starts to rally, we would basically, worst case, on some of our options, give some premium back, and on some other options realize profit to balance that out. So if GameStop by next Friday would be above 35, it would still even out, but we obviously would get almost twice the premium that we would get otherwise if we just set the $30 call, or just sell the $30 calls. which obviously would not be bad. Worst thing that happens is GameStop rallies above our lowest strike price of 25, and we basically just get those shares called away. Now, if we look at the chart, however, for GameStop, we had a small retracement. The big question is, we'll actually have to zoom in now to get a better idea here. Is this here an ABC corrective pattern? And I really think, let's see if we hit a minimum target here. So if this would be our A, up, B, and C, our minimum target would have been at 23.15 and we reached 23.10. So I count that as a hit. So I really think that we actually have a potential corrective pattern here, and we'll get another 5-wave push down, which would make it even more attractive to sell just the $24 calls. So how do I check that real quick? So if we undo that basically, so, and a $24 strike price, it would not be much better, to be honest. So we see if we sell 5 of those, we'd look at $100 in premium, whereas if we sell that combination that we just had, we actually look at $75 in premium. So, and it's still there, that's nice. So here we have a 7, or now 74. So we would have to buy back 5 of our existing 5, and we end with, like, let's see if we can close them out like this. No, they don't. Oh, one already closed out. Okay, so it says, and their quantity was 4, so we have 4 left. Okay, so let's cancel that and switch that here to 4. And then we have a mid of $66. So we're gonna submit that whole order here to basically, with that, okay, it didn't trigger yet. So limit, mid, okay, 50. 50 seems a little low. Let's go for 50. Okay, cancel that one. And now let's first close out our existing ones. So buy back 4 pieces and buy them back at 2. And then build the one for next. And as said, we want to have one for 30. If we have 25 and 26, and then on the other hand, we need basically 34, which doesn't have a price right now, and 35. Okay, so the mid price of that bid is there, but ask is not. Okay, so let's see if we can get that for 100 even. But first, we obviously need to get that one to close. Let's see if that will trigger. Do I want to, let's make it $3 and then they close. Yep, there we go. So we have that closed out. And now we can actually, submit that. So it's in total 1, 2, 3, 4, 5 against our 500 shares, and submit the order. So for, transmit that. So they are all September 6, 24, 26, 30, 34. Yep, so. Now let's see if we can get that sorted in a way that it stays on top. There, no. Why do you keep? Order window, yeah. So This way it stays on top. Okay, so right now there is no mid. So again, 24, 20, no, 25, 26, 25, 26, 30, 34, and 20. Yeah, so 34 seems to be the issue here. So if we go 27, we just reduce the premium. If we go 24, we don't have the 36 as a counter option. So, okay, let's leave that one for 100 right now, and then schedule or circle back then later. Average cost missing for. Okay, then circle back later to see if we get the order to fill. Potentially, especially since even if we have a 1, 2, 3, 4 movement here, so let's assume that for a second, so that we potentially have our next wave 1, 2, then we would expect a push till here and then a recovery for a wave 4. So we can definitely wait a little bit here to see if we, first of all, get values for, and now we have mid and ask. Mid works, 73 is, I settled for that. If we get it, so actually we can make it, it is 60 now, okay, that I can also live with for a week. And now it's just gonna go down, of course it's gonna go down, so $50 per week, do I wanna settle for that? 54, 51. I mean, I cannot adjust it fast enough. Yeah. Now I'd say, oh, come on. I'd say we leave it at 50. If that triggers, it's okay. And it triggered, yeah. So we got that one in for a total of 50. We see the different calls that now expire. So 1, 2, 3, 4, 5 against our 500 shares. So that's fine. Yeah, with that, we're good here. So we can close the strategy. And then we can actually look at NVAX. Okay, there we're still in the retracement pattern. We broke through the 38.2. Let's zoom in a little bit here. Question is, will we bounce here at 50, or will this just be with A, B, and C, and we actually get a little lower here before we potentially go up? Again, if I'm right, we will see eventually the rally up here in a third wave. If I'm wrong, then, well, that call option that I'm holding will just expire worthless down the road. So the other one we looked at recently is Maxon, where we also expect, now we hit the 61.8 retracement level here. So we're here on a 4-hour chart. We originally got in here, so we can use the little cash that we have to actually increase our position a little bit. So basically buy, and so that would be 200, I guess, 200 shares. Or 300, yeah, let's buy 300, submit. So there we go. And just balance our cash positions. Great, so cash positions balanced, increased our maxing position a little bit, because here the pattern would suggest that we either already finished our corrective pattern here and are going up from here, and the second option would actually be that this is wave A down in some way. This here is wave B, and basically wave C just reached the minimum target, although we would then expect a little bit push further before we then go further up. Or there is no valid pattern and it will just rally down, but then again, our investment in the stock is like quite low, considering that now we have a total of what's that, around $100 invested, so it's really not a lot of money. Yeah, so that's about Maxon. So we'll have to wait and see if we basically finished whatever 1-2 correction we had here potentially and go up, or if we first get a further push down. But to be fair, so on the, what do we have first? So no, not daily, 4 hour. I think odds are right now at a 50-50. So to be fair, so either this is really the corrective pattern because we bounced 9s at the 61.8 retracement, and that is actually really the next impulsive wave up. But considering that we already retraced that far in this movement here, I also consider the possibility that we'll get another push a little lower, and then from there make our journey up. Yeah, I mean, obviously the third option is I'm wrong, but yeah, we don't consider that. So yeah, let's check our usual suspect, Barnes & Noble Educational. We are waiting to see. We are in the target area of what I believe is a 1, 2, 3, 4, 5, and should therefore get potentially a correction down here, or we will rally further. Remains to be seen. So, but overall, I think that's gonna, yeah, like be long term still fine. Immersion continues down a little further. We will see if we actually bounce here at the 61.8 or touch the 100% and go up from there. So we're looking at a daily chart. So we'll basically early next week have our answer. No, still around the 30-cent mark. Yeah, we'll have to wait and see. As I said, I expect it to go to 38.9 or maximum 50 and then actually get another push down below the 20 mark, where I think it will bottom, and then from there we could consider re-entry. Cause 1, 2, 3 might have finished either the big third wave, considering that it's the 2618 level here and we get a correction before we go further, or finish the small third wave correction and we go further. So also good long term in my opinion. The Nasdaq, okay, we skipped a few things yet now. Yeah, there we're still waiting. So personally, I'm bullish. Right now, the question would be, is the corrective pattern finished here at that low, or is that just a part of the corrective pattern? So, because if it's finished here, we'll get 1, 2. If it's not finished, we'll get another push a little lower. As said, we would expect the 19,400 mark as like the minimum retracement, but it doesn't always have to happen. So we'll have to also wait and see here. Now, since we already looked here, let's look at SPY. There we're technically still waiting for a little bit of movement. We reached one of the target areas, not the 2618, but the 2318, 382. And question will be, will we stay above it and hit this to finish basically a third wave here, wave 4, wave 5. So again, same time, short term potentially bearish, and midterm, long term still bullish. And SunPower just moving along. Green wave also still waiting for something to happen. SMCI, we already started. So again, now today we actually seem to get the breakdown. I guess if we reach 250, that would be the goal for this third wave, in my opinion, unless we only get an ABC correction. But there, if we zoom in a little bit, let's take a weekly chart. Expansion, I don't think that's the case. I think we'll get, so that this is only part of the correction. But overall, if we look here, we see we already reached the 100% target, and the second potential target for that wave C would actually be here at 380. And if we break the 380, then I would consider that the confirmation that we'll have 1, 2, 3, 4, 5. Yesterday would have definitely been a good day to jump in and short it or buy puts. But yeah, I think there's still more time down. Actually worth checking what the rate on options is here. If we go with January 25, yeah, it's a steep price, $800 premium. Obviously, implied volatility is going up. So yeah, I'm gonna stay out of that one. And yeah, that's that. Then we have NVIDIA, we have Novavax. So we covered Novavax already. Max and cost known. Immersion we also looked at. Greenwave, GameStop we already looked at. Should have waited a little bit. Here we would have gotten a little bit higher premium, but I'm okay with the $50 we make for the week as kind of like premium just for having the shares. Obviously, if this turns out to be wave 1, 2, and we now get a rally for wave 3 next week, then it means I will sell a few of the shares at a loss, and then hopefully the rally is big enough to actually get all of them called away, because then it would even out nicely. If we only get one called away at, what was the lowest one, 25, yeah? 25, yeah. Then we have to consider that for another 100 shares on the other end of the spectrum, we cannot sell calls below 29 to 35, depending on if we're willing to give up premium or not. So, but overall, it increased the premium that we earned, although not by that much now in comparison. Like maybe I should have, honestly, like, so that was maybe a slight mistake on mine. I should have kept the price at 100 and either it triggers or it doesn't. So, but yeah, what's done, it's done. So we'll just leave that the way it is. And I think with that, we actually finished our summary. There are no questions in the chat. I see Olga is not here today. So, and none of you seem to be asking or wanting me to look at something specific. So we're just going to call it a day. As said, like, we'll just keep monitoring our positions. Eventually things will, so eventually we'll reach a point where ideally, or not ideally, where probably our GameStop shares get called away, which frees up all of our capital and which gives us more wiggle room to, again, be more active. Until then, it's going to be not as exciting because it just will be selling weekly calls against the shares that we have, ideally with strike prices of 30 and higher. But yeah, so that's it for today. Thanks for stopping by. I hope you were able to take something away. Don't forget, as always, like, subscribe, enable notifications. And with that, then see you probably tomorrow again, roughly 5 minutes before market open, with another stream and another episode of Daily Market Mastery. Till then,